If you ask 7 different people about commercial real estate investing, you get 7 different answers. I'm going to break down for you in this video the 7 most common ways to invest in CRE and also the most effective ways as well. And my team's done $1.6 billion transactions over the past few years. So I've seen every strategy under the sun, and these are the 7 most effective ones for you to make the most amount of money, have the least amount of risk, and also know what to avoid, what to do more of here in 2026 and beyond. Now, number one, as everyone thinks, commercial real estate investing is the core investing strategy. Multifamily typically takes the cake. This is when you're buying property, and the whole goal is to just have it be stabilized. I want a solid 5 cap, 6 cap, maybe 7 cap, not a lot of value add, and just a good, strong asset for you to just hold on to and get passive cash flow. Income focused, lower risk, lower returns, but it's super safe. And also, if you think long term, especially, this will also really powerful for you as well, because you're going to have high appreciation rates. Number 2 on this list, these are all value add opportunities. Now, these kind of investors are trying to find deals with high cap rates. Think 8, 9, 10, and higher. These deals are more risky, but more returns. They also have a lot of things wrong with the property. It could be 2 things. Either one is operational. This is OpEx, meaning that they have bad management, they have bad tenant, they have bad communications, they have no automations. All these things make up our OpEx. Or it could be a CapEx strategy, and CapEx is going to be maintenance. Maybe the roof is broken. Maybe the inside needs to be repaired and renovated. Maybe the landscaping is not as good as it could be. There are easy ways to do value add. Now, I love seeing deals where it's just operational, because it's not hard costs, it's kind of soft costs. And that for these people, when we're doing value add opportunities, they can go to any kind of niche out there. Up above a whole video that breaks down every niche of commercial real estate, and more of that breaks in this video as well, but they work for everything. Now, the most who should not do value add are probably brand new people who have never done a deal before in their life and not used to, fixing things, managing people, having better operations. There is a more, headache. You probably want to stick with number 1 or number 5 on this list as well. This is easier ways to make money in commercial real estate and learn the ropes with less risk. Now, on that point goes to our next one, number 3. These are people who are mostly doing redevelopment. Imagine Sam Zell. Sam Zell was an opportunistic investor. He said, I want to find deals that are undervalued by a lot, going through a bankruptcy, or has a lot going wrong with this property that I can go in there and fix it and make it a stronger asset. Think about any deal that is probably 20, 30 years old, or hasn't been updated for 10, 20 years. Those are redevelopment plays. Like, for example, I have a deal right now, it's off market. This one is $15 million. It's on South Congress here in Austin, Texas. And it probably takes around $4 million to buy the property, to fix the property up, redevelop it, nothing too crazy. Another $1 to $2 million of holding and leasing and miscellaneous and soft costs. And then from there, you go from a $20 million property to probably a 30, 35 or higher $1 million property that would net cash flow about $1.5 million a year if you kept it. That is opportunistic. That is a 100% play trying to do a redevelopment on a massive area. This one is mostly distressed assets. It's higher risk, it is high potential upside, it takes more money. This that level of property is more like a trophy property, obviously, because like you're doing something super amazing. We have another one. This one, actually, I'll say for the next one, for number 4. But on this point, though, people who probably avoid this are also new investors. If you don't have a lot of experience yet, a lot of capital, so you're gonna spend, $1 million of just holding costs for this property at least, probably not the best play. Redevelopment plays are for those who are super used to doing real estate and have the experience. Number 4, that I think is super powerful, is totally this development. This is from ground up to the skies. This strategy has the biggest upside. It also has the biggest risk. You can go bankrupt super quickly on this. And when you say development, it doesn't have to be skyscrapers. It could be warehouses. It could be storage units. All those also counts as well. So there's levels to this. So you're like, hey, I love building stuff. Jordan said it's risky, which is true, but I just want to do it anyways. You can just start small. Like for another example, I have another deal that is on the river of South Austin. It's off market. That one is $19 million. It probably costs $60 to $80 million of construction to make it a tall skyscraper. Where it's at, that's the best property for it. 100% trophy location, and it'd probably be worth $140 to $160 million. That would be easily a $50 to $60 million payoff for that investor. Now it'll probably take you though 3 years to do that, tons of costs, tons of risk, and who knows where the market will be at 3 years from now. Maybe you can't lease it up. Maybe you can't sell the condos. All these are also issues as well. So those kind of people, those are normally family offices, institutional buyers, people who have tons of experience in development or developers. Those are what you will see more often than not when it comes down to that class of strategy. Number 5 on this list, this one is super safe. This is probably the safest way to do so, and also a really common way as well. This is this triple net investing. This is investing to people for passive cash flow. This is all you're looking for. Some appreciation, not a lot of management. And this allows you to really reap the rewards of owning a property and having as low risk as possible. Think Starbucks. Think Dollar General. Think Google and Apple and Verizon even. Like offices are also triple net. And triple net, I think, is one of the best ways to do so. It's kind of like investing in bonds. It makes money for you. You're investing with a business more often than not. And that business, if it does well, you do well too. As long as they don't get out of business, they'll keep the lease term there. Now, what's different about multifamily investing or other different strategies of long-term investing is with triple net, these terms are normally 3, 5, 10, 15 plus years. So you have one tenant or multiple tenants for a longer amount of time. Triple net also means they pay for taxes and insurance and also the CAM, which is the common area maintenance, meaning that you have less out-of-pocket expenses every year, and your biggest risk was putting down payment to buy this property and then collecting the mailbox money. So triple net, I think, is a really powerful way to do so. Super popular, super safe. Number 6 on our list, this is about capital stacking. This is all syndications, all joint ventures. These are when you pour money together for your friends and to your network to buy bigger deals. That's all it is, pooling capital. And there's 2 main roles. You have the LP and a GP. The LP, they are a limited partner. They are going to be pretty much a silent partner is probably the better phrase for this. More often than not, they are a minor stake in the deal. They want to give you money, have you, the GP, which is the general partner, do most of the heavy lifting from finding the deals, managing the deal, and so forth. And those are all discussed in different roles, how you want to, pay people, who is paid first, all the investors, all the LPs and GPs, which is why I call it capital stack. It's one big pyramid, Everybody has their own roles within that stack. Structures matter way more than returns when it comes to syndications. And of course, I don't need to say this to you. You should not work with people that you don't really know or trust. This is a big, big deal you're doing more often than not for syndications. And syndicating can work for everything. You can syndicate a phone. You can syndicate an iPad. You can syndicate a house. You can syndicate apartments, buildings, storage units, skyscrapers, office buildings. Does not matter. Syndication is pulling money together collectively to buy bigger deals as a team. Really common, really popular way. And also I think it's a great way as well to get into real estate. If you're brand new, like, hey, triple net seems pretty safe, I might do that one if you're brand new. But if you're like, I want to learn the ropes as well and see how things work and take more bigger bets like redevelopment or value adds, then maybe you become an LP for a syndication and you're now able to say, hey, I'm going to give you money, but I'm going to be part of this as well. Teach me what you're doing. I wanted to be there as well to learn the ropes. That is a really easy way for you to get into the game with less risk, more say, and kind of get a built-in mentorship. And then number 7, this one is about niches. It's specialized strategies. They can be from storage units, from boutique hotels. They can be medical offices, data centers, which is super big right now because AI. AI needs data centers to have power. So all of these strategies, all this niche, industrial office spaces, multifamily is a niche. And a lot of times, when you look at commercial real estate investing, you will find people who are big on one single niche. Now, again, I think being opportunistic is also good too. I think sometimes you find deals that are in storage units that are really, really good. 11 cap, 100K cash flow, 17% cash to cash returns day one. Great, that's a good deal. Or you find deals that's multifamily. Like, hey, this one, when I buy this property and I rehab it, next 2-3 years, I'm going to double the value of this property. That also is a good deal as well. Now, what matters more than a niche are your main strategies. Are you doing it for value add, for cash flow? Are you doing it for a trophy property? What is the strategy? Because again, when it comes down to commercial real estate, CRE, you have a large range from beginners, intermediary, and you have institutional and family offices. And the goals for each of these different, buyer psychologies are massively different. You don't need to do everything, but you just need to make sure you understand the basics of what is the best strategy for you. And down below, I'm actually curious, in the comment section, what strategy is your favorite of the 7? You love doing value add, development, redevelopment. Which one speaks to you and why? I'd love to hear your feedback on that one. And of course, you want extra help and support. I help you source deals on off market, negotiate, do the underwriting, the whole 9 yards. So you have the easiest time moving forward and buying your next investment. And I'm so bold to say, if I don't save you these 5 to 6 figures in your next investment, I work for free. And so far, my team and I have never worked for free because we always save our clients a minimum of 5+ figures. Honestly, our average is probably over $250,000 we save for our clients per deal. So if you want the same kind of results and experiences with us, down below, link in the description and call me directly. I help you out for the whole entire strategy moving forward. And of course, you want more support outside of just having me helping you do things. Over here, a whole video that breaks down the A to Z of commercial real estate investing and a playlist as well about all things CRE. But as always, thanks for watching. Have the best day yet. I will see you at the top. Glad to have you.